Hey guys, welcome to Make Money Count.
Listen, what we're seeing is the Government of Canada 5-year bond yield has continued to drop. It's up a little bit today, but we're at 3.3% on the Government of Canada 5-year. And that's huge news for longer term fixed borrowing costs. If you remember, we always talk about the spread that lenders want to see between the Government of Canada 5-year yield and 5-year fixed rate mortgage rates, about 150 basis points. It can move a little bit from 120 to 180, but with a 3.35-year yield, you're looking at 4.8% 5-year fixed rates on average for the market. Now, again, like a premium and a discount kind of gets priced in there depending on risk in the market and what the banks want to see. But that's good news for borrowers. And that's not to say that we're trying to guide borrowers into 5-year fixed rate mortgages, because I definitely think variable is going to be the way to go. I think that in order to kind of contemplate the relationship between a variable rate and a fixed rate, you have to contemplate the relationship between the strength of the Canadian economy and rate cuts, because it really is, and we've spoken about this at length, it's a game of chicken, right? It's the Bank of Canada is very reluctant to start dropping rates too aggressively and incite inflation again, because it's going to be very difficult to attack again with monetary policy. But they're doing that with a clear mind towards how much this is damaging the Canadian consumer. And I know that you have a few points as to how damaged that Canadian consumer is. So I'll let you discuss that in a second. But it's really right now, the pain that the Canadian consumer is feeling is going to continue until we see more significant rate drops from the Bank of Canada. The other part of this that we were worried about was that the American consumer and the American economy seem to be doing so well. But I think that as we start seeing more retail reports coming out of the United States, we're seeing a picture being painted of a weaker American consumer and a weaker American economy. It's so easy to detach Wall Street and Main Street in the United States, right? Like, unfortunately, what we look to for our kind of psychological indicators as to how well the American economy is doing is we look at the S&P. But when such a huge component of the S&P is, 6 or 7 companies, it can distort the strength in the American economy, or the perceived strength in the American economy. So Bank of Canada is worried about two things, right? They're worried about inciting inflation, and they're worried about decreasing interest rates, not only because of inflation, but also because of this divergence from the United States. So if we see kind of continued weak numbers coming out of the United States, coupled with weak numbers here in Canada, it will provide them with further motivation to decrease interest rates faster. Again, I'm still uncertain as to whether or not we're going to see a July rate cut. I hope we see a July rate cut, but if we don't, I hope we see 50 basis points in September. So again, it's like a game of chicken, right? We can see it every day with our borrowers. More and more borrowers are looking to do something now, but that doesn't mean more purchasers have come into the market. Doesn't mean that the real estate market is stabilizing. Still a ton of supply and very few buyers out there, especially with interest rates still where they are right now.
Yeah, it sounds like a lot of people who are trying to sell their homes right now are really running into a problem.
Yeah, there's no buyers, right? There's no, if you have to sell something right now, the market is not your friend, right? Like, this is very much, I know that like they monitor whether it's a buyer or a seller's market based on months of inventory, and it indicates that it's very kind of slightly skewed to the buyer, but it's like nothing we've certainly seen in the 25 years that we've been doing this. I think we got some good stuff out of this.
I'm very excited to have you back in the studio. I don't know when you're coming back, but it doesn't feel the same without you here. So I'm excited about that. But if you're watching, like we always say, make sure to hit like, make sure to hit subscribe, leave us a comment so we know what to talk about. And until next time, make money count.
All right. Bye, buddy.
Okay, bye.